works that good. It is getting kind of dusted down. The issue is just, so if it gets under the 9, then you have room to like 1630. So it's one of those spots like where you're just not sure if it's got like a crazy amount of room. But whatever, we'll keep an eye on it. So guys, we're getting a little bit of a gap down in the market. A couple things to remember about what's happening in the market right now is that, you know, the weakness has been getting bought. So we've had a few gap downs in the last, you know, couple days or whatever, and that early morning weakness has been getting bought. We're in this weird spot where we're overbought, but we're like kind of too strong to be like aggressively shorting, because with earnings season coming around, and the market at resistance, you know, all it really takes is a couple bad earnings reports to really get this thing, right, just smoked back down for a few days and get that downside risk back on. But we're just not seeing that action yet intraday. You know, intraday, what's been showing us is that the dips have been getting bought, right? And so we got two aspects of things where we're going to kind of have to wait out the open to see if the market goes red to green, or if the market itself starts to roll back over and starts to really kind of dice through, and we start to see some of that volatility come back. One thing to remember in the market is that even when the market's been flatter, like even when the market was going down a little bit, the actual volatility here was really the actual volatility was really getting smoked, right? So volatility has been going down even when the market has been showing some weakness. And so that's kind of telling you that the market is healing overall. But we've got two aspects that we have to play, right? We are at resistance, but now we're getting a gap down. Does the market go red to green, or does the market, right, start to ORB to the short side, and then we'll know which way to play the market. Till then, we'll just have to chill out. Watch list for today. This UNG, we're showing a nice rounding bottom over here. So this thing was $41, right? Comes back to 24. Now you got this rounding action here that's been showing up for the last week. You're starting to break over that 200 SMA, over that 9 EMA, and start working your way back to the upside. I think, you know, we could get UNG run into this kind of that 30-31 area before we have really any level of big resistance. My caveat, or like what I would be playing UNG with, is probably UGAS, but it is a little bit wild, so you just got to be kind of careful. You know, if you were normally trading, say, 500 shares or something like this, you would go in with 100 or 200 because it just trades wild. Its range is too big, and so it's when it dips, like, you can get smoked out really quickly, so you just got to be super mindful of that. We don't want to get into any kind of position where we're trading something that's too wild and we have too many shares, because it just gives us too much downside risk. So I will be trading UGAS instead of UNG, but you know, small. ROKU had this nice kind of breakout, and now we've had a 4-day consolidation above its MAs. We're getting a small gap down on it today too, which is actually good. If I want to long something, I would rather be longing it on a small gap down than chasing it back higher, especially if I'm trying to do a pullback play, because on a pullback play, right, you're just stretching that rubber band a little bit more, that 38. So there's two levels of support to think about when you're thinking about a pullback. First is always the bottom of the breakout bar. So that's always like a level of support. And then you have your moving averages and stuff like that. So, you know, between 38 and this 36.70 is where we're hoping, right, to start to see some type of traction on it. When you think about a breakout, the breakout bar candle is the most important candle when judging pullbacks. The breakout bar candle is the most important candle, because you need the bottom of that to hold for a flag pattern or a pullback pattern to still be valid, right? Because if it doesn't hold, then you start coming back and filling that gap. And when you start filling that gap, then it turns into a different type of setup. And so the breakout bar is always going to be the most important. And so we do need that to hold. If we start to see on smaller time frames, right, look at your 30-minute charts, always align on multi-time frames. If you start to see on your smaller term time frames some rounding action, some changing action, where you're starting to see higher highs, higher lows start to build, then you know that the bottom has been put in, and now it's going to start bouncing its way back into the 45, 46, 47 range or wherever it's got to go. We don't know, right? But we can only just play the probabilities of what we see on the chart. So keep that on your list. I got this PYX on the list too. You know what, this one, the one issue with this one, it has a super lack of liquidity. Even though it trades 2 million shares a day, it doesn't trade like a big mover. Like CGC, right? When we trade CGC, it's got big volume and a lot of liquidity, and so you're able to get in and out really easily, which is important. Something like PYX, the volume did pop up a little bit from 1 to 2 million, so you do have expanding volume, which is important. The second part is you have a base breakout, right? So this 14 to 15 area, see how you tested this? You got 1 test, 2 tests, 3 tests, 4 tests, 5 tests. And so when you think about like tests of resistance, the more times you test resistance, the more powerful the breakout can be if you actually break and hold. And then the volume is just a confirmation indicator, right? We don't use volume to buy, but we use volume to confirm price validity, which is going to be really important. The stash is new, Horace. The stash is new. It's only for a couple days, but we'll see. We'll see. I always want to be porno alive. So 1 test, 2 tests, 3 tests. We need to break and hold here. Notice how we didn't close above the breakout spot, so that's important. So we need to get over it, and then we need the liquidity and the expansion of volume to confirm price action. And then if it happens, we'll take a gander at this and see if we can get this thing up into this 18 to 19 to 20 area. I don't know for sure. It would require the rest of the market, the rest of the pot stocks to also hold up, which is 50-50, right? The CGC looks like it needs to pull back for a couple days. You know, obviously it's probably a huge turn anyways, but it's super overbought at this point, right? You're on day 1, day 2, day 3, day 4 of the move. You know, if you want to long this thing, it's going to need much, much deeper pullbacks. You can't chase this thing up into the hole. PCG, I noticed everybody's talking about this on the puts and stuff. Yeah, this thing may bleed out for a while, but the easy money was already made, right? This was the move that you were kind of looking for, right? There are no home runs. That is a home run. You got the move you're looking for. You know, is there continued downside? Sure. But the big chunk of what you were looking for, you just got, right? That's a gift. When you wake up on a Monday and you've got a 50% gap down, Robbie, and you got, it looks like you got puts on this, then that's cool. You got the gift you were looking for, right? So don't get too wild. Always take some off the table, and you know, don't be greedy. Gap list. Watching this ATHM. If it breaks under Friday's lows, I think we're going to get a potential play on this one. You know, overall, this chart's looking dusted. Now it's breaking its trend line. It dropped down and squeezed like all a get up on Friday, but now we just gapped down and we're retesting that level again. If we break below and start to build, then I think we could take a short in it and wait for patterns. Remember, when you have a gap down like this, if you want to do an ORB short, right, it needs to break under 72.50. Then you look for the ORB pattern at the open, and then you take it down. If it breaks under 72.50 and it starts to shred, but it does not give you an ORB pattern, wait for it to pop, right? We want to see it pop. Wait till it pops into the 9 EMA, then watch it roll over, but it still needs to hold under that breakdown spot. Remember that when we're trading, we're trying to align on multiple time frames, which means that, right, our daily, our intraday, they all have to line up for us to be able to take the trade. So just be mindful of that. MBOT is obviously the penny popper of the day. If you're into small caps, this should be probably your main focus. The market cap on this thing's like $6 million. So the float on this is going to be in the couple million. You're already starting to see, so 600,000 shares in volume. So you're already starting to see, right, some of that float turnover in it and really start to push. Usually I find if I'm going to trade small cap stocks, I need to see like 3, 4, 5, even 10 times the float in volume for me to, you know, really get interested in the shred, because that's the only way it's going to hold up that kind of high price when you're already up like 50%, 80%. As with anything in a small cap stock, you never chase it at the open. You never just buy it to buy it. You have to have a surefire pattern if you're going to try to trade something up 80%, because as we know, these things are all turds. So you got to let the pattern set, right? Let the trend develop, and then look for low risk entries to enter it. Otherwise, you know, you're going to be just very disappointed. I've had times in my life where I buy like 4,000 or 5,000 shares of this thing, and you turn your head for a second, go to the bathroom, this thing's down, you know, 30 cents, 40 cents, and you're ready to jump off a bridge. So let's not get into any of that when we're going in. This Yeti's kind of interesting. You know, we're starting to rebound here. This is an IPO stock. They just confirmed their earnings. Usually when you get an IPO stock and they're confirming their earnings and they're saying they're guiding higher, that's a good thing, because usually IPO stocks have a lower float. They're just brand new. They don't have necessarily like a large amount of analysts and stuff following them. And so what happens is when they put out a fresh PR that's positive, then we could get this kind of expansion, and we may be able to kind of get a good shred out of this one. I'll be watching this one for an ORB at the open. It moves decent. You know, I've watched it for a little bit of time. Last time I will say the last time it gapped up, if you guys remember this, it gapped up on its earnings last time, and it fucking got shredded. And we ended up actually having to short it. Because it's so shredded. So we'll take it with a grain of salt whether it holds today. But be prepared, because in the past it's given up its gap and gone the other way. And then, you know, we'll wait and see what happens with PCG. At some point, if it just drops down enough, there'll probably be a quick short squeeze in it. And we'll see if we can hop on that for a little bit of time. But otherwise, this stock sucks to trade intraday. We've tried to trade it intraday like 10 different times. The first couple days was awesome. And then like the rest of it, you can see by the size of the candles, a lot of times the move is made in the gap, and then it's just kind of left doing nothing. So just kind of be mindful of that. I don't have like, to me, today seems like a transition day. I'm not seeing any hot heat like a CGC type of move where you have, right, the big volume and the big range come in. We're not seeing that today on any potential. So usually when that happens, right, let the trend set and just let things play out, because we don't necessarily know which way the market's going to go. But we do know that we are at resistance. But there's not any watch list stocks that are just, to me, or even gapper stocks that to me are saying, whoa, this is it. This is what we're trading all day. When that usually happens, you've got to trade a little bit more risk averse and just kind of be patient and let things play out the way they need to. Good. GE, let me look. You know, I mean, it's moving okay. I just don't know where the play is on it. You know, something like that is all right, but, you know, nothing too crazy. DBD, hey, Christian, how are you, brother? Or sister? Yeah, this one's got a nice trend. You can probably keep that on your list. VSTM. Yeah, I'm not exactly sure on this one. You know, it's kind of just stuck in range. Usually I always think of stocks, like I want stocks either be about to break out, or they're like at support and they're about to round up into a breakout. You know, something along that end. But otherwise, you know, I tend to leave them alone and just kind of let the trend set a little bit better. EQT, you know, this one is actually, you know, probably this one to me looks like a little bit more of a swing trade stock. It just doesn't have the range I like to day trade, but I definitely see the, you know, the longer term pattern in it for show. For show. Good. And yeah, be careful on that M-bot, but, you know, definitely put it on your list and let's see what we can do. You guys. When you like kind of, you know, after your morning shreds, right, you know, reorder your watch list a little bit. Make sure you got like, you know, your favorite plays at the right spots and stuff like that. I always like to kind of rank my plays just to make sure I got just, you know, I got everything moving and working at the right spots. You know, like otherwise you just have so many damn stocks on your list, you get a little confused, and next thing you know, right, it's like, holy shit, what did I just do to myself? So just be mindful of that. Always try to rank your place. So I like to do tier 1, tier 2, tier 3s. Tier 1s are stocks that are like ready right now to get shredded. Tier 2s are stocks that are, you know, that need a little bit of work, but I like them. And then a tier 3 is like stuff I just trade every day. So guys, have fun, be good. Let's go make some money.